Hello and welcome back to the channel. In today's video, I'm just going to quickly break down and make it super simple why the CPI inflation report that came out moved the market, or what I think probably could be behind it, and how to kind of look forward. There's two avenues that you could take. Just try to break it down simply for you. So the CPI is the Consumer Price Index, and basically it's just measuring the changes in the price of goods and services from the perspective of the consumer. So really simple, just how much do things cost for you? Obviously right now in life, everything's way more expensive. So I'm sure you understand that. And we can see here that at one point it was at 9.1%. Now you could argue like how they're actually measuring all of this. Is it's how they used to measure it all, and it's probably actually much higher than that. But this is what they're officially going with. Okay, it's 9.1%. And we see on the chart here that it's slowly been coming down. Now, yesterday's report, it ended up being 7.7. The forecast was 8%. And that's all the market really needed in order to have a massive day yesterday. So if you're paying attention, November 10th, 2022, pre-market, the CPI report comes out, and this is just the SPY, just a general ETF for the S&P 500, and it just absolutely ripped up, right, pre-market, and then continued from there, and continued after market as well, and then into pre-market today, and then it's still kind of hovering around, which I'm impressed with. It's Friday though, options are expiring, and it's just kind of usually a wish-washy kind of day that I don't particularly like to trade too much in, especially if I've had a good week. So I'm leaving it alone for today. So I figure I'd break down this. Now, one of the reasons I think that we had such an explosive day is because of a lot of people being bearish. So after we had this spike in the SPY, and things were kind of looking like okay, they come back down, and then people are getting super bearish, and we had that, if you remember the Jerome Powell meeting just the other day. He had some bearish news about probably going to hike some rates, and the reason the interest rates matter, if they start to raise rates, then it becomes more expensive for companies to actually function, and it ends up hurting the stock market. It's just like a very simple explanation. But if rates continue to go up, then it's kind of bad for the market, and if rates start to come back down, then it's good for the market. Let's just leave it at that, so the video's not forever. And essentially, because of Powell's speech, he's kind of saying, we actually might have to raise rates more, or we might have to keep this going on longer than necessary. So I believe a lot of people were a lot more short and had short positions on going into this, especially just like look at this breakdown here, right? Breakdown here, a bit of a crawl back, still breaking down here as well, and like kind of a indecision day, and then that massive red day to go down. I mean, you wouldn't be blamed for thinking the market's going to go even lower from here, right? And if you look at, Google, same type of thing, right? Very bearish on that day. Super bearish down here. You could imagine it's going to continue down. Amazon, same thing, right? Continue down. So a lot of people were probably in a bearish mindset, right? Like everything, like look how low everything was. Microsoft, same thing, right? You would consider that. So I think that even though 7.7% is still super high, and the Fed still has to keep the rates high, and they still would have to probably go through the plans that they have anyway, it shows you that all the market really needs is a tiny little bit of good news, and all of a sudden you're off to the races. Now, if you understand what a short squeeze is, look at like GME, Diamond Hands, AMC, stuff like that from a year or two ago. Obviously, that was one of the biggest short squeezes we've ever seen. And really simply explained, a short squeezes is when you have a lot of people who are short the market, and then the market starts to go back up. In order for them to actually get out of their position, they have to buy back. If you want to learn more about shorting and actually understand that, check out this video here. It's actually a really good explanation and a great analogy to help you simply understand it, because shorting can be pretty tough. Anyway, as the market was probably more generally short, with that tiny little bit of really great news coming out with the inflation, if inflation starts to come down, then maybe the Fed doesn't have to keep raising rates. And then that means that if the rates start to come down, then that's good for the market, right? Like I was saying before. So it's kind of like almost like a little mini short squeeze on the day. And then we just had, this massive run yesterday, which was really great. And this is just probably people having to get out of their positions, get out of their short positions, and then people also putting money into the market thinking, okay, this is great for the market. I'm going to go ahead with that, right? So hopefully that kind of explains a little bit more in very simple, quick terms. CPI, consumer price index, you want the inflation rate to start to come down so that the feds can start to lower their rates, and lower rates is good for the market, and we have the market kind of crawling back, hopefully, right? Going forward, what I could see happen, there's two sides. You could have the shorts covered here, okay, great, and then now things are going to start to come back down in an overall trend. As we can see here, we're obviously in a downtrend. So you could continue that overall downtrend, or this could be the spark of a bullish trend going forward. And we start to rip from here. And, I would wait for a cool down. I wouldn't be jumping in right now, especially on a Friday. I would wait for kind of a cool down back down to the 385, or maybe even this previous high here at 390, something like that, and then a continuation from there. So I hope that kind of explains a little bit for you, very simply, CPI and the relationship between interest rates and the overall market, and why we had such a great day on Thursday. Thanks for sticking around, and I'll catch you on the next one, and have a great weekend.